Good evening, everybody. Welcome to our investor education program on investor education program. And today's presentation is going to be on the product. Today we are going to focus on good, which is also known as jaggery. So before I begin the session, uh, all the participants will be on listen and view only mode. And if there are any queries or questions, then there's a Q&A option on the left hand side of the screen. You can post your questions there. I will revert back to you once the session is completed. So before we understand about good and what are the contract, what is the product about? So let's understand a little bit about the exchange. So commodity trading is very old. In fact, it dates back to as old as the 19th century when the Bombay Cotton Trade Association was established. And then following that, there were a lot of other commodity exchanges which were established region wise, commodity specific wise. We had oil seeds and raw jute during 1910, 1930. Then we had a spices exchange, we had a castor exchange, then we had pepper exchange. Different commodity exchanges were established, and then later to regulate them, the Foreign Markets Commission had come up in 1953. But post that, because of the supply shortages, and when we had Green Revolution, because of the supply shortages, so again, to control that, bans were later we had seen a lot of bans that were taking place by the regulator because of the fundamentals basically. But post that, a lot of committees had come into picture, and they have understood and they've tried to analyze the importance of commodity markets, and that is when forward tradings or commodity derivatives trading was allowed from 2001. And commodity exchanges had started their operations in 2003, and post that, since 2003, all the commodity exchanges have been successfully functioning. But post that, we have seen a lot of integration taking place, especially after SEBI has taken over as the regulator from September 2015, where we have seen that the equity stock exchanges and commodity exchanges have been integrated as one, and a lot of developments are taking place in the commodity ecosystem space, which we will understand in the next slides. So this is the basic structure of how an exchange is regulated. We are under the Ministry of Finance. This Securities and Exchange Board of India regulates all the national exchanges. And as per the SCRA Act, currently there are about 91 commodities in which trading in the derivatives market is permitted. So after SEBI has taken over, these are some of the developments that have taken place. SEBI had taken over in September 2015. Post that, in 2017, that's after 2 years, after two period of 2 years, we can say September 2017 has been very instrumental, because after that we have seen a lot of changes that have come up in the commodity space. So basically, the first thing was SEBI has permitted options in commodity derivatives. Then it has permitted Category 3 AIFs. After that, like I said, integration of equity and commodity arms of broking. Bank subsidiaries were also allowed to distribute commodity derivatives. Then FPIs, who are commonly known as eligible foreign entities, EFEs, they are termed as EFEs in the commodities market. They are permitted to export to hedge their exposure in the Indian commodity markets. Then in March 2019, we have seen that mutual funds and PMS have also been allowed to participate in commodity derivatives. And then finally, in June 2019, commodity indices have also been allowed to be traded. So these are by addition of new set of participants, by addition of new set of products to the ecosystem, we are the exchange or the regulator together are trying to diversify the market for better products to be available for the participants basically. These are some of the commodities that are traded, listed commodities on the exchanges, comprising of cereals and pulses, spices, fibers, guar complex, oil and oil seeds. So in totality, there are about 21 agriculture products in which currently futures trading is taking place. And just to understand briefly how commodity and financial derivatives differ in their nature. So, financial derivatives are only cash settled products, but commodity derivatives are actually settled by physical deliveries. And in commodity derivatives, we have quantity and quality differences exist, both agri and non agri. Whereas in financial derivatives, no such differences exist. And then in commodity derivatives, what actually plays a major role is the cost of carrying, basically the holding cost, because it includes testing, obviously, for its quality assert, certainty, then the cost of storage, the warehousing cost, and the insurance costs that come with it. On the other hand, financial derivatives are only are a function of basically the interest cost of the derivative. Physical markets again are when we talk about the agriculture markets, especially physical markets are seasonal in nature, and financial derivatives are perennial. They are throughout the year, active throughout the year, and commodity derivatives are largely dependent on factors like supply and demand, basically the production, so production, against that how is the demand in the market, then the import and export regulations, government interventions in terms of government's procurement, MSP, government procurement plans, government's MSP, or any import duties, taxation. These are some of the things that affect the commodity derivatives. And financial derivatives, on the other hand, are long term, basically because they are dependent on the global and local economic conditions, basically, then the performance of the entity and the taxation structure. Now, coming to our product in focus, which is the good futures, which we are will be soon launching on the exchange platform. Will be available for trading on the exchange platform. So when we talk about good, we'll firstly try to understand its production, then the seasonality, value chain, futures contract, what are the contract specifications, and what is the price volatility, because the volatility plays a very important role in the functioning of the futures market. Yeah. So, coming to its production, India is the largest producer of good in the world, producing nearly about 60% of the global production. So, the global production is about 13.6 million metric ton, out of which India produces 60% of the total jaggery production. And it's again the leading producer. And after India, Brazil, who also majorly produces jaggery, is the largest exporter of jaggery, followed by and India, and after that you have USA, China, Indonesia, who are the largest importers of jaggery in the world. And when we talk about the production from Indian perspective, in India, uh, it's basically the states of Uttar Pradesh, Maharashtra, Karnataka, and Tamil Nadu, who are the largest producers of sugar, because again, jaggery is a byproduct of sugar. And when we talk about their again share in total production, then Uttar Pradesh ranks number one. It produces about 47% of the total good production, followed by Maharashtra, which is 21%, Karnataka 8%, and Tamil Nadu 5%. And when we talk about the total production figure that we have as on date, which is about 1718 and 1819. In 1718, we produced about 4.5 million metric ton, which has increased in 1819, doubled to almost not double, less than doubled, but yeah, it has almost, you can say, about 90% increase, wherein the production has increased to 8.17 million metric ton. So the production has increased significantly, and along with the increase in production, I am sure there are because of excess demand, this production has increased, and when the production has increased in relation to the demand, there's definitely we will see a lot of price movements also taking place. like we've discussed, the raw material for good or jaggery is basically sugarcane, and which is harvested from October to April. And when we talk about the mandi arrivals also of good, basically in the major producing states that we just discussed. So Uttar Pradesh, we can see that Uttar Pradesh has the largest number of arrivals of good. Which is about and every year from 2013 to 2018-19, this data has been taken from EggMarkNet. We can see that the contribution of Uttar Pradesh in good has been the highest, followed by Maharashtra and then Karnataka. But when we come towards 1819, Uttar Pradesh has been the largest supplier or contributor of good. So, like any typical value chain for an agri commodity, the stakeholders in a good value chain also include farmers, processors, and the traders. So, basically, there is a value addition that takes place at each level. So, from a farmer's point of view, a farmer is more he is more into the production, and once the produce has come for harvest, he harvests and then stores it. And he also partakes in the production of at the you have these small units across village levels where the jaggery is produced, and from there it comes out to the aggregators, commission agents, and traders, who largely are acting as financiers, first level of financiers to the farmers, wherein they take the produce from them in terms of arranging transportation and storage for them. And then from there it changes hands into the processors, who are finally into processing, packaging, and labeling, refining and also labeling. And then lastly it goes into retailers for its final by marketing to consumption. So why do we require a good futures? Is we firstly, like we said, supply and demand plays a major role, and we have already seen how its supply is increasing over the years. So this increase in supply against demand definitely will have an impact on the price, and because of this, the price of good is highly volatile, and this volatility asks for reliable mechanism to mitigate the risk arising out of the price fluctuation. And there is continuous growth in overall production of good in India. And out of this total production of good, we can see that a considerable amount is used as a feed, and therefore this will have an overall impact on the overall cost of the feed for the feed manufacturers as well. And on the basis of this huge production, it can be said that this commodity is available in large number, and therefore there is no hindrance for introduction of this commodity in the futures market. So this is the volatility that I've been talking about since the beginning of the presentation, wherein we have tried to plot the price from January 2000, from 2005 to 2015, and you can see the price has been more or less stable till 2010, and from there it has suddenly increased to doubled, you can say, from 1500 to 3000. And from there again you can see there have been definite volatile moments where the price has been moving. We can see the bounciness in the prices, and this is what is defined as the volatility. And this is the volatility against which the processors or the value chain participants need to hedge their price risk, so that they are covered. I mean, their price is covered and their risk is mitigated because of these volatile movements in the price. And when we talk about volatility, 16-17 it was about 17.5%, 17-18 it is increased to 19.2%, and 18-19 also it is again at 19.2%. So anything that is more than 15% is considered a very volatile commodity in terms of agri products. uh, so and because of this volatility, it becomes very important for the processors involved in the value chain of jaggery or good to protect against any price risk. So depending on these factors, or depending on these parameters like supply and demand, and how the prices have behaved in the past historically, and how is the value chain built. So depending on all these factors, we have tried to build up a design for good futures. So we've already seen that from the data that Uttar Pradesh is the largest contributor for good in India. 47% of the total good production comes from India. So, considering that, the identified center as the basis location would be Muzaffarnagar in Uttar Pradesh, and in Muzaffarnagar, again, we can see there are many big production centers, along with the presence of many processing units. And because of the availability of processing units, you can see that the availability of infrastructure is good, and considered as a benchmark center of discovery of good prices. And Hapur is also good production center with good infrastructural support. So this is how the contract is going to look like. The unit of trading or the delivery unit will be 10 metric ton. And the price quotation would be for rupees 40 per kg, and the tick size would be 50 paisa. The quantity variation for the delivery would be 5% plus or minus. And the basis, like we said, it would be Muzaffarnagar, inclusive of all local taxes and exclusive of GST. And it would be a cold storage warehouse. The additional delivery centers would be Hapur. Then the delivery logic is compulsory delivery, and the other delivery specification and expiry date are common as per the other exchange products. So this is the quality specification of for good futures contract. The sucrose should be about 75 to 80% minimum. Reducing sugars on dry basis by percentage by mass should be about 10 to 15% maximum. Moisture is 10% maximum. Sulfur dioxide on dry basis percent by mass should be 150 parts per million maximum. Water insoluble matter should be 1.5% max. Sulfated ash is 3.5% max. Ash insoluble in dilute hydrochloric acid is 0.3% max. And 100% dry golden brown cane wood of Chaku type with the above specifications will be deliverable at Muzaffarnagar, while 100% dry cane of Balti type is available is deliverable at is allowed for delivery at Hapur location. So this is how we were planning to launch the contract in October 2020. So whenever we receive the approval, so the first contracts that will be available for trade would be December, January, April, March. February, March, and April will be available for trading, and then post that, I think the entire 12-month contracts we have requested to be launched to the regulator. So we're just waiting for the final yes. Once that is done, as soon as that's done, we will be launching the contract. So that was on good the basics, just the basic product design. Just trying to give you a snapshot of how the commodity plays out in the total supply demand, how the prices have performed. Now coming to the investor guidelines, because it's very important to understand. So for the investor guidelines, again, these are certain do's and don'ts that I will take you through. Read SEBI exchange circulars available on the exchange website. You've got to trade only through exchange registered member. Fill the KYC mandate for unique client code. Insight on rights and obligations and risk disclosure document. Insist on bill and contract notes on every settlement. Ensure that the contract note contains all relevant information, such as your basically your registration number, your trade order details, traded quantity, and the arbitration clause. Cross-check for any trade genuineness through the verification facility, which is always available on the exchange website. Then you have to pay the required margin and MTM obligation in time to avoid any other consequences. And beware of the risks associated with the DAPA trading. Reconcile the statement of transactions from the member and holding statement of the depository participant post every transaction. In case of any discrepancy, voice the same immediately. And issue account pay check, demand draft in name of the broker as it appears on the SEBI registration certificate. And you must insist on periodical statements of accounts of funds and securities from the broker. Check accounts and notify brokers of any discrepancies immediately. And funding from unauthorized intermediaries aren't covered under settlement guarantee mechanism of the exchange. These are some of the do's. Basically, whatever do's we have understood, these are just the opposite of that. That, don't deal with unregistered intermediaries. The list of the members is available on the exchange website. So just trade through the exchange registered members only, and don't undertake off market transactions. Don't get carried away by alluring advertisements, rumors, hot tips, or any promise of assured returns. Don't start trading before understanding the risk disclosure clause. Don't accept unsigned duplicate contract notes. Don't fall prey to market rumors. Don't let risk against positions accumulate beyond your capacity to bear. Don't simply go by any explicit implicit promise made by the analyst. Don't miss on keeping track of your financial contractual obligations against your positions. And don't go by the reports predictions made by various print or electronic media, which is very important. So that's all from our side. Thank you so much for joining in. If there are any queries, I will be happy to, take your queries, please. So, sir, you have asked other expenses as Bardana and Mandi tax. Sir, they're all inclusive in the price, all local taxes. So, the price that will be traded will be X cold storage delivered price. सो आपका जो प्राइस होगा वो प्राइस पे जो आपको कोल्ड स्टोरेज तक लेकर आने का जो भी खर्चा लगेगा, बारदाने का, मंडी ट्रांसपोर्टेशन, और वो सारे प्राइस जोड़ के जो आप वेयरहाउस कोल्ड स्टोरेज डिलीवरी तक लेकर आओगे, वो प्राइस होगा सर, बेसिस प्राइस. आई होप आई हैव आंसर्ड योर क्वेश्चन सर. Any more questions please? सर, सेटलमेंट प्राइस इज, जो हमने देखा है प्रेजेंटेशन में, ये एक्स कोल्ड स्टोरेज वेयरहाउस मुजफ्फरनगर. तो बायर को वो जो प्राइस कोट होगा वो एक्स कोल्ड स्टोरेज वेयरहाउस मुजफ्फरनगर, इंक्लूसिव ऑफ ऑल लोकल टैक्स. तो उसमें मंडी टैक्स अगर रहेगा तो वो आ जाएगा. कॉन्ट्रैक्ट किस तारीख को लॉन्च होगा? सर मोस्टली हम अगले हफ्ते का देख रहे हैं, मोस्टली हो जाना चाहिए। कोल्ड स्टोरेज का वेटिंग था सर, कोल्ड स्टोरेज अगले हफ्ते कंफर्म हो जाएगा तो फिर तुरंत डेट आ जाएगा कभी लॉन्च होगा। सर वो डेट पे डिपेंडेंट रहेगा। अ, अभी हम ऑलरेडी नवंबर में है तो शायद पहला कॉन्ट्रैक्ट जनवरी का ही लॉन्च होगा। अगर और कोई क्वेश्चंस या फिर डाउट्स नहीं है तो हम सेशन को क्लोज करते हैं। मैं वापस आप सब लोगों को धन्यवाद करना चाहूँगी। आप सब लोगों ने सेशन में ज्वाइन किया। थैंक यू सो मच फॉर ज्वाइनिंग इन द सेशन। और अगर कोई भी क्वेरीज है तो आप हमेशा रीच आउट कर सकते हैं हमारे आस्कस के मेल आईडी के थ्रू, और वी विल बी एबल टू रीच आउट टू इमीडिएटली। थैंक यू सो मच।